Today we are going to take a look at SMCI stock, the huge recent announcements, what could happen for the stock to move higher. We shall look at the macro data, the earnings report, and also do a fundamental analysis, equity research report. And also I'll be telling you a lot about what is happening about supermicrocomputer heading into this week, which is one of the more complex and polarizing ones. And also there's a lot happening at once. So I want to make sure that you understand all this before Monday opens. Please, if you enjoy such content, give it a like, share, and subscribe. Now, looking frankly at the market conditions, the story of SMCI this year has been an absolute roller coaster. The stock closed Friday at 24.18, down about 2% on the session. So it traded in a range between 23.38 and 25.17 on Friday, and that number doesn't begin to tell the story of what this stock has done. SMCI is down roughly 35% over the past month after brutal June that saw the stock fall over 35%. It's down about 29% year-to-date, sliding from around $34 at the start of the year. The stock has a 52-week range that's been absolutely massive. It hit a peak of 51.40 on June 2nd before pulling back roughly 31% from that high. So the market cap currently sits at about 15.6 billion, and here's what makes this setup so fascinating and so volatile. The business itself is executing at an extraordinary level in the AI infrastructure build out. But the stock has been absolutely crushed on margin concerns, short sellers, attacks, and massive equity financing announcement that spooked the market. Now let's start with what actually happened in this past quarter, because the earnings picture tells you everything about the psychology of this market right now. Q3 fiscal 2026 results ended March 31st, 2026 were a mixed bag. Revenue hit 10.24 billion, up a staggering 123% year-over-year, but that number missed analyst estimates of 12.36 billion by about 17%. CEO Charles Liang explained that the miss was due to some customer data centers not yet being fully built out, causing revenue to be deferred, not a sign of weakening demand. So the earnings beat was the bright spot. The company reported non-GAAP EPS of 84 cents, significantly beating the consensus estimate of 62 cents. So net income came in at 483 million. And here's the critical part. Gross margin rebounded sharply from 6.4% in Q2 to 10.1% in Q3. That's a major recovery and signals that the company's profitability in AI infrastructure is improving. The guidance for Q4 is where things get interesting. Management expects the net sales in the range of 11.0 billion to 12.5 billion. The CEO also referenced a 12.0 billion target. GAAP EPS is expected between 53 and 67 cents, with non-GAAP EPS between 65 and 79 cents. For the full fiscal year 2026, the company expects net sales of 38.9 billion to 40.4 billion. Analysts are forecasting full-year EPS about $2.13. Now let me walk you through the fundamental picture, because I think it's critical that you separate what's happening to the stock price with what's happening to the business. SMCI is a pure-play AI infrastructure company. They design and build high-performance server and storage solutions for AI, cloud computing, and data centers. They are a critical supplier to the AI build-out, and demand for their products remain insatiable. So the company's fiscal reporting period is roughly 2 quarters ahead of the standard calendar year. So fiscal Q3 2026 ended March 31st, and fiscal Q4 ends June 30th. So the company is executing on multiple strategic fronts. Liquid cooling expansion. On July 15th, SMCI announced an expansion of its rear door high heat exchange liquid cooling product line with 10 new models designed for high density AI and HPC infrastructure. Cooling capacity ranges from 10 kilowatts to 120 kilowatts per door, with a rack level cooling up to 240 kilowatts. This is strategically critical because AI data centers are increasingly power constrained, and liquid cooling is becoming a competitive differentiator. Now, Red Hat Kubernetes Edge AI partnership, where with SMCI unveiled the turnkey Kubernetes Edge AI appliance in direct collaboration with Red Hat, OpenShift, and Portworx. This is not just another bare metal server, it's a fully validated self-healing infrastructure solution. Now let me take you through the elephant in the room. And please, if you're liking the analysis, please like, share, and subscribe. So the short seller attack and the 7 billion financing. In June 2026, SMCI announced plans to raise 7 billion through equity-related financing. That announcement spooked the market and contributed to the stock's steep decline. Short sellers piled on. As of June 15, 2026, SMCI had a short interest of 96.23 million shares, representing 19.07% of the public float. That marks a 29.21% increase in short interest since the prior report. So the short interest ratio is elevated. Short volume spiked by 4.47 shares on June 23rd alone, a 55.83% increase from the previous trading day. Shorts are firmly in control with about 15.7% to 19 of the float sold short. Now, according to 19 analysts, as I take you to analyst sentiment, polled by S&P Global, SMCI has a consensus rating of hold with an average price target of 37.838, implying roughly 54.68% upside from current levels. So the targets range from a low of $15 above 38% downside to a high of $58 above about 140% upside. So, but in the recent analyst moves, we see CT raised its target from 31 to 33 on July 13th. Bernstein maintains a hold rating with 37 target, and the consensus remains balanced. Now, looking at institutional ownership, BlackRock is the largest institutional holder with 43.36 million shares, and institutional ownership is substantial. The key levels I'm watching on the downside: 23.238 in the recent intraday low. Below that, the stock has been in a steep downtrend from the June 2nd peak of 51.40. If we break below 23 on heavy aggressive volume, we could see a flash towards the $20 level or lower. On the upside, I need to see a clean close above $28 to feel like momentum has stabilized, and a close above the 50-day moving average would be the signal that the recovery is starting. My best case for how we trade this week is continued volatility with a bias towards consolidation. The stock has been absolutely crushed, down 35% in the month, and it's finding some buyers at these levels. So what are your thoughts? Please, something to think about also. Remember to fear God and give glory to Him, for the hour of His judgment is come, and worship Him who made the heaven and the earth and the sea and the fountains of waters. That's Revelation 14 verse 7, where God is calling us to come back to the roots and we obey Him as our Creator. See you then. Blessings.